Hi guys, welcome to another episode of The Aspiring Entrepreneur. I'm your host Hamza Chowdhury and welcome to today's daily recap. It's February 25th. It's Thursday and boy was it Bloody Mary. And today it's so easy in these situations to panic, right? And there's been so much money pumped into the market since COVID. We had the March crash, and I wanted to pull out the S&P here just so you guys can get an idea of how much the market has moved. So back in March, we had the COVID scare, and you can see that we were trading around 337. We tanked all the way over 100 points on the SPY. And since then, you can see, guys, one thing, right? Clearly, the trajectory is straight, right? It's uptrending, and the market's been uptrending consistently. And there hasn't really been, there's been sort of small corrections, but, when we talk about a correction, we're talking about, 25, 20%, something really significant. And it feels so heavy. We feel like the entire market's selling off. Tesla's under $700, and we don't realize like Tesla was under $700 in December. And so I wanted to just kind of start off this video to sort of not necessarily calm our nerves down, but just to kind of put everything in perspective, which is if you started investing, way back when, or even back in COVID time, guys, we've gone from, a low here, the 220 in the SPY, and we've gone straight up. And keep in mind, guys, the SPY is an ETF of the S&P, which Tesla and, a lot of stocks are a part of, Apple, Microsoft. And so in the long term, if you're a long-term trader, there's nothing here to worry about. Now on the short term, yes, we are seeing a lot of volatility. And so you can see right here that we hit the 50-day at the S&P, and we did that earlier in the month, and we did that once again. And it's just so hard to kind of forget that, the bulls have basically taken over the market for the past year. And there are some days that come by where the market is just going up, and you kind of sit there and you're like, this feels so like, not necessarily fake, but it felt so like overextended. Like what's the catalyst that just keeps driving the market? I understand there's a stimulus. I understand that the market's rebounding. But guys, we're trading at all-time highs. We're not recovering anymore. We're trading again at all-time highs. And so what basically happens is, look at the volume spike, right? Even bigger than what it was 2 days ago. So you basically have profit taking that's going on. And so I know some people that panic sold, and I just don't want you guys to panic sell out there, especially if you're a long trader. Again, this is not legal advice or financial advice, but keep in mind that usually if you're a long-term trader, you're holding stocks for over a year so that you can capitalize on long-term capital gains and not short-term. And again, I mentioned to you guys that I'm preferably a day trader. And so this purple line represents the anchored VWAP. And so you can see that we've had a couple bounces off of that. And you can see our 200-day just happens to line up with our anchored VWAP. And so, yeah, we have 50-day support, guys, but ultimately this could be our downside risk, which is 344 for the S&P. And like I said, we were just there, back here, right, post-election. And so it just feels so heavy because it is. But at the same time, it's kind of like, well, we were just there less than 3 months ago. Okay. So I want you guys to put this in perspective that, it sucks being in a long position. I mentioned to you guys that I was up on a ton of positions, didn't sell them. And now I'm also back holding, but that's why we have covered calls, right? That's why as long as we own 100 shares of whatever we're back holding, we can sell covered calls on a weekly basis and make some income while we're waiting for our stocks to come up, or, we're looking to cash out. And so my general advice, and again, this is for educational and entertainment purposes only, is, maybe consider having a little more cash on hand. And it's not because I'm asking you to cash out of the market. It's because I think it's a good idea to be able to dip buy some of these plays, right? Again, if Tesla wasn't a buy for you at 800, but it is at 650 or 680, but you have no cash, then how are you going to get involved? How are you going to buy the dip buys? And so never forget to pay yourself, never forget to profit take. But days like this are definitely days where you want to be dip buying, where you want to have some kind of cash. And so if I had a portfolio, 20, 30% cash, it wouldn't be a bad thing. I'd always at least have at least 10%, right? But at the same time, 20, 30%, there's definitely some dip buys out there, guys. But like I said, this is what I would be risking, right? Is basically from October, right? It's been that long. We've just been uptrending. So if we get a 50-day breakdown, guys, this is what I'm saying we would be risking. Okay, and you can argue, you know, even the bottom part of the Bollinger Band at 370, but it just feels a lot heavier. Okay, so let's just sort of jump into it. So Apple, one of the things I mentioned, which was, I believe, this day here, right, is that we sold off, we came back, and I told you guys again earlier in the week that I was worried because we sold off again. And we had, you know, this massive sell-off, which I mentioned was a good thing. It was a flush. And then it seems like now we had this dead cat bounce, you know, yesterday, really, from the market. Once we hit that flush, we bounced back, and then we sort of traded sideways. And clearly, we want to test these bottoms again. Okay, so if I'm trading Apple, going back to some of our old support lines, I'm basically looking for, you know, the 117.80, essentially the 118. Okay, so anything that you're risking for a long now, you're risking that market flush as a retest. Okay, and so the 118 is what I'm risking for Apple if I'm dip buying Apple. And my clear resistance line now, a heavy resistance line, which is the level we couldn't hold back here, is going to be the 127.50. Okay, so that's where you want to get your positions on. And like I said, guys, you can just tell you're trading 148 million shares and our average is 78. So there's obviously a lot more volatility. There's a lot more funds cashing out of tech, really, across the board. And so Tesla's no different. I mean, I really was, you know, felt really good the fact that we had a solid bounce on our go heavy at Tesla at 695. I mean, guys, we had from 695 all the way to 740, and it was clearly previous support, and then we just had resistance the last couple days, and we just couldn't break it. And what was really interesting, guys, was look what happened. Look at the pivot around here. It's around what, 695. So for about, you know, about an hour or so of the trading hour, we were just trying to really hang out around 695. And I said, hey, as long as we close above 695, it's still a valid support. But guess what we did? We finally broke down. Okay, and so when we broke down, we're starting to test these lows here at like 650. But again, my downside risk that I want you guys to be aware of will be 620. And the same thing here is now we're trading well over under the 50-day. And so we're basically bearish on the entire market. And now I don't think that we're going to get down here necessarily to 440, 400. But guys, I mean, that would represent, you know, essentially a 50% drop in Tesla, right? From the top at 800. So you're getting a really good, decent, you know, trade here at 682. It's still a great buy in my opinion. I would be adding shares, but this is what I'm risking now at this point is the 620. Okay, and so since 695 didn't hold, that's going to essentially be our new resistance line. Okay, and I mentioned to you guys that my big resistance was right here at 775. But if the market wants to continue to sell off and we don't see a flattening of the momentum and we can't see the signal line crossing over, then guys, we're going to continue to see this negative momentum, right? Which is shown here on the TTM squeeze, right? We said if followed by the red dots, which indicates a potential squeeze and consolidation in the market, these lines represent downside momentum. Okay, so oversold, you know, great time to just buy small shares of Tesla. Again, covered calls, you know, covered calls to wherever your break even. Okay, guys, so again, risking for a long at 620, and our new now resistance will be right here at this level of 695 to $700. And like I said, if we continue to see negative momentum in the stock market, I wouldn't be surprised if we retested the 620 tomorrow on Friday. But from my experience, we tend to be positive and end the week in a positive way. Obviously, all these funds have people who are, you know, probably saying, hey, what's going on with my money? So I would expect to see the market to rebound. So don't be surprised if you see us test 695, and if we can close above it, then we validated that again as a support. Palantir, got to say it's a really disappointing play. Still a big fan of it, still holding a pretty good size. And, you know, just a really surprised that, you know, we had this really good rebound on this, you know, earlier this week, and with the general market sell-off, I mean, guys, we're trading at $23.96. So we're talking about, you know, going back to essentially really the first leg up in the stock back in, you know, November. And so we traded sideways for quite a while, couldn't hold up any of these levels. We flushed during earnings, and now we're going back to this, you know, below the lows that we had during the market flush. And that's why I'm a little concerned. And so what I want to look for is, you know, are we going to be testing these lows here, which were 22.50? Okay, so that's what I'm risking here, was this day where we hit essentially a low of 22.50. And then you can see here also as well, we hit a low of 21.15. Okay, so essentially, you know, it has the ability to go down, but you can see that, you know, we essentially retested 30 and we've just been flushing downward every day. And I feel like we've never really rebounded anywhere close to where we were, even with solid earnings. And so unfortunately, you know, the fact that we broke the low from the previous day, you know, there could be more downside risk to 2250 and at worst case to 21. And so for you guys, you know, who are longs, I mean, honestly, this is a steal. And you can see here that we have somewhat of a flattening of the curve for the momentum. So I can see this carrying on for another, you know, 3 to 5 days before we start to see some positive momentum. So what we need to see is a rebound tomorrow. And I can see this thing getting up to 2750, which was our go heavy range. But like we said, that's going to be our new resistance line, right? Right in this level here. So let me turn this on. So this 2750 level is going to be our resistance line, right? But like I said, just really surprised at how weak the stock has been. I mean, it's just been selling off. And we know there's more shares out there, but I mean, this is just a steal, honestly. $23 for a stock that was trading, you know, up in the 40 range not that long ago. And then Mara and Riot, you can see that, you know, Bitcoin is down 4%. Same thing. It was up over 50,000 for the last few days, and it's just tanked with the market. And so a lot of companies, Square and whatnot, are trading Bitcoin, and Bitcoin's down. So Mara was down for the day, and so was Riot. And so, you know, same thing is that we want a DAP play around $25, and you know, the same idea is that, you know, this thing is going to have trouble getting up past back into the 40s. And so as Bitcoin sells off, so is Mara. So again, I'm a dip buyer at 25, and I go heavy around right at the 50-day here at 21. And just keep in mind that a lot of stocks are starting to fail at their 50-day, so this potentially can go back to $12 if Bitcoin really collapses, which I don't think it will. I think, as I mentioned in previous videos, I really don't see it collapsing, considering the extent of how many companies are now investing in Bitcoin, including Tesla, including PayPal and Square and all these companies. Okay, so again, I would definitely be going heavy here at this level, but you know, you can always understand that we could see this trading below the 50-day potentially. Okay, so we're still trading at $30, but you know, it looks like after hours we might have been slightly down a little bit more at 27. So again, don't be surprised if you get back to at least the 50-day here at $21, $22. Okay, and the same thing with Riot. It was down 12% for the day. And you can see the clear resistance here at $60, and now we essentially hit sort of our first DAB play at $40. And I mentioned that the go heavy zone was around 24, 25, and same thing. You can see the 50-day levels here in the high 20s. And so at this point, guys, I wouldn't necessarily be bullish on Bitcoin, you know, especially if it's going to start to sell off, because it's had this massive gap up. And it was trading higher, you know, for a long time. You can see it went from all the way here from 25 up to 50, or sorry, excuse me, 70 in a matter of 6 days. So this squeeze is what we're seeing the consolidation of, right? And same thing with Palantir, right? You see these upper bands, and then you see the sell-off. Okay, so same thing with any stock, is when it goes on the upper band and it gets squeezed, and then you just wait for that day for the flush, and now it's just going to come back down to earth. And that's why we want to buy in a period of consolidation, which in this case is going to be in the mid-20s. Okay. CCIV, I mean, the list just continues, guys. I honestly wish I could just have some good news. I wish I could say we did a gap fill. You know, Lucid Motors, I mean, how many people bought here, even bought up here, and now they're just, you know, cutting their losses. You know, again, look for that 50-day support at 22. We couldn't even hold a key level at 35, right? So it's just been a constant sell-off. Now we've had some bounces here at this level around 26, but I'm just not interested. You know, I'm just not interested in the stock. I just think it's just way overpriced, and there's nothing you can do at this point. The news is out, right? So what's Lucid worth when the cars aren't even going to come out anytime soon, and there's not going to be any revenues? So you're essentially buying for something for the future. For a lot of you guys out there, yes, you do own part of Lucid. Congrats. But the problem with that, guys, is the company's not going to be reporting earnings anytime soon. Like, when they have no sales. And so I really, this was just sell the news, guys. Sell the news. It's on the upper band. It's bullish. Just sell the news. And there's, you know, the gap fill will come eventually, but it's not going to happen anytime soon. And I know a lot of people that got involved at these levels, you know, so I hope you sold. I hope you sold some. That's why I like day trading, guys. I know you miss a lot of these moves, but guys, you're flat. And honestly, I was talking to my brother about this. Is you become emotionalist, like you really do. Sometimes it's emotional, obviously, if you just get in a really bad trade, but more or less you learn to cut your losses and kind of move on in some cases. And it's just, you're always flat more or less. And the time, I call it the moment you marry these stocks, now you start to get emotional. You start to question. You start to think the market should go the way that you want it to go, as opposed to what makes sense. Today, guys, I do want to go over a bonus stock with you today. Dash reported earnings. And again, for you guys who watch my videos every day, appreciate the love. Guys, what do you think I'm going to talk about, right? I'm going to talk about that setup that we talked about with QCOM, with the Square. Look at that setup. So now, in theory, if the setup works, we're going to see a gap up in the morning, right? We're going to see a gap up here around the 150s in the morning. And then 5 o'clock or so, it's going to start to fade. And then once it starts to fade, right, we're not going to get involved. And then we're probably going to see a bottom. But guys, this thing can go down a lot. I mean, 146. I mean, keep in mind, we had a strong support here at 137. Okay, so that's where I would start to think about dabbing into DoorDash. And the low here is 135. Okay, so 135 to 140. Sorry, 135 to 137 is where I'd get involved. So don't be surprised if you see this 146 tank tomorrow after it gaps up. So if you're shorting now, you get squeezed and then they'll fade it off. So guys, let's just test it out. I'm putting myself on the record, okay? So I'll follow up with you guys tomorrow and let's see how that plays. But obviously, it's clearly oversold, and it's following that pattern that I like, okay? All right, guys. Again, bloody merry day. It's not something that's fun to watch. It's not something fun to experience. I still have AMC shares. That was kind of nice. I mean, obviously they were up for the day, but you know, just know that we were very bullish for a very long time. The bears have clearly taken the market. Once we get a 1.9 trillion or a 1.5 trillion or whatever that ends up being stimulus package, guys, we're going to be heating up in the market real fast. With that said, guys, as always, if you did enjoy this video, please do hit the like and subscribe button. We're a 100% free content channel, and we just basically your support helps us grow the channel and hopefully get people similar to yourself who might be interested in this video to watch it. With that said, guys, I wish you the best of luck, and I'll see you guys tomorrow. Bye-bye.